Welcome. Today, we are looking at banking. This is a key topic in your commerce exams for SS2. Pay close attention. Let us begin. First, let me explain the meaning of banking. A bank is a financial institution licensed to accept deposits, give loans, and provide other financial services. Banks play a central role in the economy. They channel money from savers to borrowers. They facilitate payments. They provide a safe place to keep money. Banks are regulated by the government. In Nigeria, the Central Bank of Nigeria regulates all banks. Banking is the business of banking. It includes accepting deposits, lending money, transferring funds, issuing credit cards, and providing foreign exchange. Banks make a profit by charging higher interest on loans than they pay on deposits. The difference is called the spread. Banks are the most important financial intermediaries in the economy. Now, let me explain the functions of banks. Banks perform several important functions. First, accepting deposits. Banks accept money from individuals and businesses. Deposits can be withdrawn on demand or at a specified time. Types of deposits include savings accounts, current accounts, and fixed deposit accounts. Second, giving loans. Banks lend money to individuals and businesses. Loans can be for homes, cars, education, or business expansion. Banks charge interest on loans. Third, facilitating payments. Banks transfer money between accounts. They issue checks, debit cards, and credit cards. They process electronic payments. Fourth, providing safe custody. Banks offer safe deposit boxes. Customers can store valuable items like jewelry, documents, and certificates. Fifth, issuing credit and debit cards. Banks issue cards that allow customers to pay for goods and services without cash. Debit cards deduct money directly from the account. Credit cards allow customers to borrow money up to a limit. Sixth, providing foreign exchange. Banks buy and sell foreign currencies. They help businesses and travelers exchange money. Seventh, acting as agent. Banks pay bills on behalf of customers. They collect checks and dividends. They provide investment advice. Eighth, providing trade finance. Banks issue letters of credit. They guarantee payments for international trade. Ninth, providing overdrafts. Banks allow customers to withdraw more money than they have in their account, up to an agreed limit. Overdrafts are a form of short-term loan. 10th, underwriting. Banks help companies raise capital. They may guarantee the sale of new shares or bonds. 11th, providing merchant banking services. Merchant banks provide corporate finance, investment management, and advisory services. 12th, offering internet and mobile banking. Customers can check balances, transfer money, and pay bills online. This is convenient and fast. Now let me explain the types of banks. There are several types of banks. Central bank is the apex bank. It regulates the banking system. It issues currency. It controls the money supply. It acts as a banker to the government and to other banks. In Nigeria, the Central Bank of Nigeria is the central bank. Commercial banks are the most common type. They serve individuals and businesses. They accept deposits and give loans. They offer current accounts, savings accounts, and fixed deposits. They issue checks and credit cards. Examples include First Bank, GT Bank, and UBA. Merchant banks serve large corporations and institutional clients. They provide corporate finance, investment management, and trade finance. They do not usually serve individuals. They do not offer current accounts or checkbooks. Merchant banks in Nigeria include FBN Quest and Coronation Merchant Bank. Microfinance banks serve low-income individuals and small businesses. They provide small loans, savings accounts, and insurance. They help people who cannot access commercial banks. Microfinance banks are important for financial inclusion. Development banks provide long-term loans for development projects. They support agriculture, industry, and infrastructure. They do not serve individuals. Examples include the Bank of Agriculture and the Bank of Industry in Nigeria. Mortgage banks provide loans for buying homes. They also offer savings accounts for housing. Islamic banks operate according to Islamic law, Sharia. They do not charge interest. Instead, they share profits and losses. They avoid investments in alcohol, gambling, and pork. Examples include Jaiz Bank in Nigeria. Now let me explain how banks make a profit. Banks make a profit from the spread between interest rates. The bank pays a lower interest rate on deposits. It charges a higher interest rate on loans. The difference is the bank's income. Banks also charge fees for services. These include account maintenance fees, ATM fees, overdraft fees, and late payment fees. Banks also earn income from foreign exchange transactions. They buy foreign currency at a lower rate and sell at a higher rate. The difference is the profit. Banks also invest in government securities and bonds. They earn interest on these investments. Banks also provide advisory and underwriting services for a fee. Now, let me explain the importance of banking. Banking is important for individuals, businesses, and the economy. For individuals, banks provide a safe place to keep money. They provide loans for homes, cars, and education. They facilitate payments through checks, cards, and transfers. They help individuals save for the future. For businesses, banks provide loans for expansion. They facilitate payments to suppliers and employees. They provide trade finance for imports and exports. They help businesses manage cash flow. For the economy, banks mobilize savings. They channel money from savers to borrowers. This promotes investment and economic growth. Banks create money through the lending process. When a bank gives a loan, it creates a deposit. This increases the money supply. Banks facilitate transactions. Without banks, trade would be difficult. Banks also help implement monetary policy. The central bank uses banks to control the money supply and interest rates. Now let me explain the accounts offered by banks. Banks offer several types of accounts. A current account is for frequent transactions. It allows unlimited deposits and withdrawals. It comes with a checkbook. It may pay little or no interest. It is suitable for businesses and individuals who need to make many payments. A savings account is for saving money. It pays interest. There may be limits on the number of withdrawals. It is suitable for individuals who want to save. A fixed deposit account is for saving money for a fixed period. The interest rate is higher than a savings account. The money cannot be withdrawn before maturity without penalty. It is suitable for people who have money they do not need immediately. A domiciliary account is for foreign currency. It allows customers to hold and transact in foreign currencies like US dollars, pounds, or euros. A joint account is owned by two or more people. All owners must sign for withdrawals. It is suitable for married couples or business partners. A common exam question asks you to define banking and state the functions of banks. Here is a sample answer. Banking is the business of accepting deposits, giving loans, and providing other financial services. The functions of banks include accepting deposits, giving loans, facilitating payments, providing safe custody, issuing credit and debit cards, providing foreign exchange, acting as agent, providing trade finance, providing overdrafts, underwriting, providing merchant banking services, and offering internet and mobile banking. Banks are essential for the smooth functioning of the economy. Another exam question asks you to explain the types of banks. Here is your answer. The types of banks include central bank, commercial banks, merchant banks, microfinance banks, development banks, mortgage banks, and Islamic banks. The central bank regulates the banking system. Commercial banks serve individuals and businesses. Merchant banks serve large corporations. Microfinance banks serve low-income individuals. Development banks provide long-term loans for development. Mortgage banks provide home loans. Islamic banks operate according to Sharia law. Each type serves a different segment of the market. Another exam question asks you to discuss the importance of banking. Here is your answer. For individuals, banks provide safety, loans, and payment services. For businesses, banks provide capital, trade finance, and cash management. For the economy, banks mobilize savings, channel funds to investment, create money, facilitate transactions, and implement monetary policy. Banking is the backbone of a modern economy. Without banks, economic growth would be severely limited. Let me give you a quick summary. Banking is the business of accepting deposits and giving loans. Functions include deposits, loans, payments, safe custody, foreign exchange, and trade finance. Types include central bank, commercial banks, merchant banks, microfinance banks, development banks, mortgage banks, and Islamic banks. Accounts include current accounts, savings accounts, fixed deposit accounts, domiciliary accounts, and joint accounts. Banks are important for individuals, businesses, and the economy. Keep reviewing, keep practicing. See you in the next topic.